Joe Anderson and Al Clopine of Pure Financial Advisors have the answers to your retirement plan. This is your money, your wealth.
Hey, and welcome to another edition of Your Money, Your Wealth. My name is Joe Anderson, certified financial planner and president of Pure Financial Advisors. Of course, I'm always with the big man, Big Al Clopine. He's a CPA sitting right over there. Got a great show lined up. It's end of year. There's still a lot of things that you can do in regards to your taxes. But let me ask you a couple of questions. I ask a lot of people, are you charitably inclined? A lot of you say yes. There's a lot of organizations that I love to support. Others of you say, you know what, no, I'm more family inclined. I want to make sure that I pass most of the wealth to the kids. Well, let me tell you something. Everyone that is watching this television program right now is charitably inclined. If you're not giving to an organization, who are you giving the money to? You got it, the IRS. I want to talk about some strategies today that if you do things correctly, you can save a ton of money in taxes before it's too late, because you got until December 31st to do this. But if you look at some charitable giving strategies, you can give to a charity and less to IRS. That's what's on my mind today. So here's the deal. When you take a look at the IRS code, it's 100 years old. What did they do prior to the IRS taxing us? That's right, there was a lot of people giving to charity. But then, you know what? So many people said, you know what, I don't want to give to charity, I just want to keep it to myself. And then the IRS said, or the United States government said, hey, we need some capital, so the tax system came involved. But now, here's the deal. The IRS still does this. If you plan a gift, they will forgive a tax. It's a big deal. So would you rather give your money to the IRS, or would you rather give it to an organization? That's what this show is all about today. To help me sort through this stuff, let's bring on the big man, Big Al Clopine. Hey, when it comes to tax planning, charitable giving is still probably one of the best things that people can do, and there's still time because we still got some time left before the end of the year, Big Al.
Well, there's no question, and that's actually why we're doing this show this week, because there really is still time to get your charitable deductions in. And for every dollar that you give to charity, you'll receive a tax deduction. So our show is going to focus on the absolute best strategies to be able to consider between now and year end. And I think a lot of us, when we think about charity, as Joe just said, it's like, well, maybe I'm not that charitably inclined, but if you're not, you are giving more to the IRS. So in this show, we're going to talk about why we want to give to charity. And the second thing we're going to talk about is the different ways to do it. And then most importantly is how to create tax deductions. I think that's what we're all interested in. And Joe,
well, is it really? I mean, I think some people really want to give to charity.
Well, I'm going to say this, Joe. In my 30 plus years in business, I've never had a person say, you know, I'd like to give more in taxes. Everyone wants to give less.
True, but I think there's more people that said, I would like to give more to charity.
Yes, quite a few.
And so we can talk about some different ideas and some strategies on exactly how to do that, because tis the season. Happy holidays, everyone.
That's right. Yeah, absolutely.
Go ahead.
Anyway, I think let's get started, Joe. Let's get right into this. So why do we give? Giving may improve your sense of well-being. Is that true for you, Joe?
That is very true for me.
You feel better when you give?
Absolutely.
I do too.
Every single day.
How about volunteering? Volunteering your time may result in physical and social benefits.
Yeah.
Now I know you volunteer what? Meals on Wheels? And
Yeah.
so forth?
Yes, I do volunteer. I don't have a lot of time. So we do the TV show, we got a radio show. I'm a president of one of the largest fee-only financial planning firms. So when I do find time, I really enjoy it.
Yes, yeah. And I, for my own part, I volunteered. I actually have coached baseball and soccer for 10 years when my kids were younger, and that was actually very gratifying. But in a lot of cases, we give, not only because we feel better, but we also get a tax deduction. And that's really what we're going to focus on today, is how to create the biggest and best tax deductions. Now, when you look at how to go about this, there's different ways to give. I mean, obviously, you can give cash, you can give by a check, you can volunteer your time, you can give appreciated stock or even appreciated real estate if you want to. And I want to hop right into giving checks or cash, because this is what most of us do. And when you think about it, first of all, checks are going to be better. Why? Because you have proof You have proof that you actually made that donation. And something to consider is if you give more than $250 to any organization, they must send you a letter acknowledgement that you actually gave that donation, because if they don't, it's not deductible upon audit. So be aware of that.
What is, you know, you take a look, if I'm giving to an organization, so $250, they have to, how long does that take? Because you got until December 31st. I mean, does people have to hunt people down to figure out, hey, I gave to you, make sure that I get a receipt for that?
Yeah, well, typically, Joe, the institution has to give you a letter by the time by the next year, by the time you file. I think maybe it's even January 31st, but it's with your canceled check and with the with that letter acknowledgement from charity. That's when you can actually take that deduction.
Well, let's talk about the deduction for a second here. So if I'm going to give to charity, how does it work? So if I give $250, I mean, how much does that really save me in taxes? Or if I give $10,000, $50,000, $100,000, how does all this work when you really take a look at the tax savings that you would receive?
Yeah, that's a good question, because really with taxes, with charitable donations, I should say, it's a deduction, it's not a credit. So that means if you make $100,000, for example, and let's just say you give $10,000 to charity. So now your taxable income, after all deductions, let's just say it's $90,000. I'll just say your taxable income would have been $100,000, now it's $90,000. So you save $10,000, and it depends upon your tax bracket. So let's say you're in the 25% tax bracket federal, that's $2,500. Maybe you're in the almost 10% bracket, you know, as far as state. So that would be then another $1,000 or so. So maybe about $3,500 savings from doing this charitable donation.
You know, some people have to be careful because there's a lot of scams, especially at this time of year. People are looking to give a little money away to try to make a difference in someone's lives. And there's so many different charitable scams. So we have a couple of different warnings out there to make sure that you understand, are you going to a legitimate charity? If someone's calling you on the phone, you know, just take a look at a couple of different things here.
Yeah, and this is right from the IRS. They're talking about, well, make sure you donate to qualified charities. Well, how do you know if they're qualified? Well, we're going to show you here in just a moment. Don't give out any personal information. Don't send cash. And if there's any suspected fraud, make sure that you report that. But really, as far as knowing whether you have a bona fide charity, you can actually go to the IRS website, and it will tell you on that website, you go to irs.gov, and I found the easiest and best way to do it is there's a search box, and just type in exempt organization search, and then you can type in the next frame your charity and make sure it's a legitimate charity. But this happens a lot, Joe. You know, when there's natural disasters or people are wanting to give, the fraudsters come out and they start making up charities, and they call you and they put pressure on you, and you think you're giving to a good organization and you're not.
Yeah, I mean, it happens with everything. It's crazy nowadays of how many different scam artists are out there. So even though it might sound really good on the surface, just do your due diligence, double check this, because, and like Al said, do not give cash, do not give your personal information out, because if you look at identity theft and everything else, be very, very careful. You know, it's awful that you're trying to do something very, very good and then someone's taking advantage of that. So just be careful. Now, hey, when we get back from the break, what I want to do is I want to get into some strategies and some ideas that we have that can significantly reduce your tax bill this year. If you have highly appreciated stock, if you have highly appreciated real estate and you don't want to sell it because of the tax bite, there's some moves that you can make. So stick around and I'll tell you exactly how to do it. You're watching Your Money and It's Your Wealth.
Hi, I'm Matt Balderston, Certified Financial Planner with Pure Financial Advisors. Did you know Americans 55 and older now account for about 20% of bankruptcies, mostly caused by medical and funeral expenses?